Welcome to this special edition of the IPR Podcast. To mark our first year, we revisited our conversations with technology leaders and payment experts, and we looked for the ideas that could genuinely change how a remittance business approaches growth. Five clear rules emerged, and let's begin with the first one. Businesses can't afford to rely on one product forever, but they also can't afford to chase every single new opportunity. The strongest growth appears to sit somewhere in the middle.
When you are a fintech company, a small to medium-sized company, a money transfer operator with, let's say, 30 to 50 staff members, you can only focus on so many products. We actually have data to suggest that those well-established medium-sized players who wanted to launch multiple products, they just remained stagnant. In fact, they lost their market share, significant market share they lost. But those players who are probably 10, 20, who are a 10, 20-man company, they focused on, in addition to remittances, just 2 or 3 products, and they realized significant business growth.
So that really stood out to me because the lesson isn't simply do more, it's choose better. Adding 10 services may not be the right move if only 2 genuinely fit the customer and the business. And sometimes chasing every opportunity is exactly what stops a company from growing.
So think big, start small. Start with maybe 1 or 2 corridors that you understand.
So the test here is simple. Why this product? Why this corridor? Do we understand the customer? And can we deliver it properly? If those answers aren't clear, more choice can actually very quickly become more complexity. So rule 1 here is diversify, but do it with discipline. And the same principle applies to technology. So there's a lot of pressure on businesses to do something with AI, and that can make the starting point feel much bigger than it needs to be. Do we need a new platform, a full transformation strategy? One of the most useful answers we heard was no. Just begin with one task.
You can pick a task, like a self-contained task, which you want to improve or enhance with AI agents, right? And you can just take that task and you can replace the existing process around that task with an AI agent, right? That does not involve, redesigning your infrastructure. That does not involve like a considerable digital transformation. You don't need to go through all of that.
So that changes the question operators should be asking. It's not necessarily what's our AI strategy. A better starting point might be which part of our operation is taking too long. Find one clearly defined problem, set boundaries, and compare the results with the process that already exists. So you're not betting the whole business on an unproven idea. You're learning from one controlled application. The next opportunity now is using technology while the customer is still deciding. Most operators already have a lot of information about their customers. They can see previous transactions, corridors, and sending patterns, but having the information isn't the same as using it, because the customer's decisions may already be happening right now. And by the time the business reacts, that customer may have already gone elsewhere.
You need to know precisely which customer, which segment will be interested in that promotion. And sometimes you cannot take, days or weeks to decide on things like this.
Yeah.
It has to be instantaneous. Someone is trying to make a decision whether they would like to go ahead with you or your competitor. At that very point in time, you should be able to react. So it's not about do you know your customers? It's about do you know your customers well? Can you do more to know them better? And can you know about them fast?
Yeah.
And that's what reduces churn and makes customers more loyal.
So that's the difference between customer data and customer intelligence. Data tells you what somebody has already done, but the intelligence helps you recognize what they're about to do. Because if you identify the risk of losing a customer after they've actually left, you haven't prevented the churn. You've just simply explained it.
Getting someone super excited about the promotion or the rates that you have and so on and so forth at the wrong time doesn't mean they're going to move money. But just imagine that they were browsing options, trying to understand what is the best, remittance provider, for this corridor to move money from A to B. If you got your offer in exactly at that point in time, that is when they're most likely to react to it.
So this isn't about sending more messages or constantly offering discounts. It's actually about recognizing intent, responding quickly, and making sure the response is relevant. That might mean an offer, a reminder, or simply removing a piece of friction. Because personalization without timing is easy to ignore, and speed without relevance is just noise. But acting at the right moment raises another question. What value can the business actually offer? The traditional remittance model is straightforward. A customer sends money, the operator earns revenue from the transaction, but then the business waits for the customer to send again. But an MTO might understand much more about that customer, and that creates a bigger opportunity.
Companies need to look at the customers as consumers of a broader range of financial services, not just moving money from A to B. So, I know you guys offer things like airtime top up and those types of things, but I think it's going to be broader than that as well. It's going to be savings accounts, working with banks or financial service providers in the receiving countries to offer the types of products that somebody in a Western country is already able to access. So actually helping those people, if you like, secure their financial futures by using a whole range of products.
So that's a much bigger role and opportunity for the MTO. It means asking what else the customer is trying to achieve. Are they supporting a household? Are they saving towards something? Or are they trying to access a service that's difficult to obtain elsewhere? The opportunity may sit around the customer's wider life, not only around the transfer. But this doesn't mean adding every possible product. That would take us straight back to rule 1. The aim is to choose a small number of services that genuinely fit the customer's needs.
What's interesting about eSIMs is that it's not transaction-based. It's actually linked to the number of customers the MTO or the bank has. And if you make the assumption that each customer will travel once a year, right? So if you have 10,000 customers, that's 10,000 eSIMs.
The point isn't that every MTO should launch every value-added service. It's that the right service can create new revenue by meeting a relevant customer need between transfers. For many providers, that could be travel eSIMs. For others, it might be savings, insurance, bill payments, or another service that fits their customers. So the decision should begin with the customer need and then the commercial potential. And creating more value doesn't mean the business has to build every capability itself. Building something internally can feel like the safest way to stay in control. But ownership and control aren't always the same thing. A business can spend years building capability that already exists elsewhere. And while it's doing that, the market keeps moving.
One of the first things they tell us is, I wish, we had done this before.
Yeah.
Because remember, these companies or banks have been trying to get licensed for 2 years, 3 years, 5 years, and they still haven't been successful. These RaaS solutions can get these banks set up within days or within weeks. The pipework has already been done. The rails have already been established.
So that changes what an expansion decision can look like. And instead of committing years of investment before the business knows whether a market will work, an established route can allow it to begin smoother. It can test demand and learn from real customers. The partnership doesn't only reduce the time to launch, it also reduces the time it takes to learn.
You tend to find that people who do then invest in developing their own system, they've outsourced just the development of that system, so it's not ongoing. So you find it deprecates pretty quickly. In 2-3 years' time, the system looks old, it's no good anymore, and then they have to come again and develop another whole new system. But if you give that a responsibility to a technology company, that's all they're doing day in, day out. They're working on that technology, working on new features, new functionality, making it look nice and fresh, keeping up with the industry. That allows you then to concentrate on the business side of the money transfer operating.
So a company may technically own a piece of software, but if it can't maintain it, improve it, that ownership may not create much advantage. So before building internally, you need to ask, is this central to why customers choose us? Do we have the expertise to keep improving it? And could a partner deliver it faster or more reliably? The answer won't always be partnership, but we want to own it isn't by itself a business case.
Focus on what is really important to you. Control the things that are most important to your business and outsource and partner everything else. That way you'll be able to stick to what you're good at and you'll be able to succeed.
And that brings us back to the 5 rules. So diversify, but do it with discipline. Start with one valuable task. Act while the customer is still deciding. Build value around the relationship, not only the transfer. And control what makes the business different while finding the right partners for everything else. These aren't predictions about the way the industry might look in the next 5 years. These are actually decisions operators can begin thinking about right now. So thank you to every guest who has joined us over the past year and to everyone who has watched, listened, or contributed to the discussion. So this may be our first anniversary, but it feels much more like the beginning of the next chapter. We'll see you in the next episode.